This is EP 2.0 of scalping. I already have a video on how to scalp on my channel. Unlike most of my videos where I do swing trading or I always teach how to swing trade, this particular topic is geared towards how to scalp. I know most traders would love to make profit on daily basis, unlike me who would always love to swing. The first video, this is just the upgrade of the first video we already have on scalping. So in today's lesson, before we move to the topics we are going to discuss under scalping, let's look at the type of traders we have. We have traders who scalp, we also have swing traders, and then we have position traders. So you have to choose the one that works perfectly for you. But on this channel, I'll teach you how all these three types of traders take trade. My name is Lamidi Sikira. If you don't know me, that is my name, or Kira Forex. Now, the topics we are going to look at is what is scalping, what time frame you are supposed to scalp on, the advantages and disadvantages, how to look for scalps, and live trading. You know how I already do it on this channel. Right after teaching and explaining the topics, I would have to teach you how it is done live on the chat, because that is the most important thing, and the end goal is to always make money. So we need to feel how this is done on the chat. If you've not subscribed to this channel, just click or hit on that subscribe button and be part of this beautiful family. Now, if you're also not part of my Telegram channel, the link is in the description below. Click on the link and be part of us and learn a lot from my experience in this industry. So the first one is, what is scalping? All right, this refers to a trading strategy where traders aim to make small profits from very short-term price movement. Scalpers typically hold positions for a very short duration, ranging from seconds to minutes, and execute multiple trades throughout a trading session to capitalize on small price movements. The next point we are going to look at is the advantages of scalping. So the first advantage we have is quick profit. Scalpers aim to capitalize on small price movements, which allows them to generate profits quickly. Since positions are held for a short duration, profits can accumulate rapidly over multiple trades. The second point is high trading frequency, taking advantage of multiple trading opportunities that arise from short-term price fluctuations. This frequent activity can potentially increase overall profitability. The third point is reduce exposure to market risks. By holding positions for only a short time, scalpers reduce their exposure to overnight and weekend market risks, such as unexpected news events or geopolitical development that could affect prices. Our fourth point is utilization of tight stop losses. Scalpers typically use tight stop loss orders to manage risks. This helps limit potential losses on each trade and ensure that losing trades are contained within a predetermined risk tolerance. Our fifth point is less dependence on market direction. Scalping strategies can profit from both rising and falling markets. Scalpers focus more on short-term price movement and less on overall market direction, allowing flexibility in their trading approach. Our next point is no overnight financing cost. All right, since positions are typically closed within the same trading day, scalpers avoid overnight financing costs that may apply to positions held overnight in other trading styles. The next one again is increased focus on technical analysis. Scalping relies heavily on technical analysis, like what we will be doing right after this when we move to the chart, such as chart patterns, indicators, and price action. This sharp focus on technical signals allows scalpers to make quick and precise trading decisions based on immediate market conditions. The next point we have is adaptability to high volatility market. Scalping strategies can thrive in volatility market conditions where price movements are frequent and substantial. Scalpers can capitalize on these rapid price changes to capture quick profit. The second to last point we have here is enhanced discipline and concentration. Scalpers require traders to maintain a high level of discipline and concentration due to the fast-paced nature of the strategy. This can help traders sharpen their trading skills and decision-making ability. Then the last one we have here is accessibility for active traders. Scalping is suitable for traders who prefer active involvement in the market and have the time and availability to monitor price movement and execute trades throughout the trading day. These are some advantages you enjoy as a scalper, but you should know one thing, that on this channel, if I give you the advantages, definitely I would have to give you the disadvantage so that when you are taking trade, you know what you are doing. When I was teaching how I take trades on 4-hour time frame, which you guys requested me to do, I talked about the advantage and disadvantage of how I take trades on the 4-hour time frame, and that is the same thing I am doing when it comes to scalping. So let's look at some of the disadvantages as a scalper. The first point, high transaction cost. All right, so scalping involves frequent trading, which can lead to higher transaction costs due to spreads, commission, and slippage. These costs can eat into profit, especially when scalping for small price movement. Then the next point is intense monitoring. Scalping requires constant monitoring of price movement and rapid decision making. Traders need to stay focused and attentive throughout the trading session, which can be mentally and physically demanding. Increased emotionality, that is the third point. Traders may experience increased stress, anxiety, or impulsiveness. You know that already, which can lead to hasty decision and potential losses. Then we also have difficulty in finding suitable brokers. That is the fourth point. Not all brokers support scalping due to their business models or trading conditions, but my broker, the broker I use, supports this scalping strategy. Some brokers may impose restrictions on scalping, such as minimum trade duration or additional fees for high frequency trading. Then the next point is risks of overtrading. Scalping can attempt traders to overtrade in pursuit of small profit. This can lead to exhaustion, reduce decision-making quality, and potentially increase losses if trades are not well planned or managed. The sixth point is limited profit potential per trade. While scalping aims for quick profit, the potential profit per trade is typically limited due to the small price movements targeted. Then the seventh point is vulnerable to market noise. Short-term price movements can often be erratic and influenced by market noise. Scalpers may encounter false signals or unpredictable price spikes that can result in unexpected losses. The next point is execution challenges. Rapid execution is crucial for scalping success, and delays in order execution due to slow internet connection, platform latency, or market volatility can impact trade outcome and profitability. Or the second to last is less time for analysis. Scalping strategies often prioritize quick decision making over in-depth analysis. Traders may have limited time to conduct true technical or fundamental analysis, which could affect trade accuracy and risk management. Take note of that. Then the last point we have here is dependence on trading environment. Scalping success can heavily depend on market conditions such as volatility levels and liquidity. Quiet or choppy market conditions may reduce trading opportunities and profitability for scalpers. Now that we are done with the advantages and disadvantages because I gave 10 points each, right? So when you are scalping, this alone should be a guide to you. Now let's look at how to look for scalps. So before you scalp, these are some of the things you would have to look out for. Firstly, you need to select suitable currencies like Euro USD, Pound USD, USD, JPY. Then also you need to use short-term time frames like the 1 to 5 minutes time frame. But if you are a beginner, I will advise that you use the 15 minutes time frame. You also need to identify volatile market conditions. All right, so when you want to scalp, you need to look out for that. Then also you need to spot chart patterns. I trade with chart patterns. All right, if you also trade with any other strategy, then you need to look out for that. You also need to monitor price action, especially candlestick patterns. You need to monitor candlestick patterns when you are scalping, especially on the lower time frame. Then our last point would be you need to have clear entry and exit plan. Now that you know what scalping is, the advantage and disadvantage, and how to look for scalp, let's see how scalping is done on the chart. So be active, follow me through, and I can tell that before we end this lesson, you would learn something valuable. We already talked about what scalping is, on what time frame we are supposed to scalp, and how to look for scalps. And as I said, we are going to have some live trading. So basically this is the live trading, and also we also talked about key levels. Now let's look at something here. This is the 5 minutes time frame. I am not too much into scalping, even though I can scalp 100%. I love swing trading, but this is also a simple strategy you can use to scalp, especially people with small accounts, because you know, if you have a small equity or you have a small account balance and you're trying to swing, a little retracement can just wipe off your account. So smaller accounts are always scalping is always good when you have a smaller account. All you need to do is to know what you are actually doing. So when we look at price here, you can see that we had price moving in an uptrend, right? So we have price moving in an uptrend at this point. We have price moving in an uptrend. Then eventually price broke here, so we had this break to the downside here. Let's consider this point as the break of structure. Let's consider this point as the break of structure here. So price broke to the downside. We can also consider this point over here. We can also consider this point as a break of structure, as price breaking to the downside. We can also consider this point over here. We can also consider this point over here. So price has broken up to the downside. Now when price started breaking from this point, you can see that we are having a series of lower lows and lower highs. So I always do this analysis. I said when price is moving in a downtrend or an uptrend, you have to look for points where price can reverse, which is our key levels. So we have this key level here. Price got there and moved towards the downside. Now we also have this key level here. So what we are going to look for is for price to just come back to test that key zone. Then we can continue. Sorry about that. Then we can continue selling to the downside. The same thing happens in an uptrend. So when price started moving towards the downside, we were having this series. You know, you see the series. This is very simple, right? So this is the series. Then we had this move to the downside. So if you've been watching my video, this should be very simple. You should know the next step for this. Now when you look at this, where do you think price is possible to retrace to before we have the move to the downside? Are you going to continue selling from here, or you are expecting price to move to another zone upwards before the selling continues. I'm giving you just 2 seconds to think about that. What do you think, or where do you think price is possible to move to before we can continue either selling or buying? Now let's see if your answer is correct. So we are expecting price to come back to this zone because this is our point where we said when price has broken, then we can look for a key zone. So you see price has broken down, so we are looking for price to retrace at this point, then we can continue selling to the downside. So this has now become a kiss or a pullback. All right, so we are waiting for price to just come and kiss this point or pull back or retrace, then we can have the continuation to the down. So we should be expecting something like this towards the downside, unless of course we had price breaking out of this zone, then we can continue buying to the upside. So immediately you see this, what are you going to do? You just have to wait for price to get here. Let's see, this is on a 5 minutes time frame. All right, so let's wait and see if price will get to where we want it to get to, which is our key zone. Then we can look for selling opportunity. Right now, look at what happened on the key zone. Okay, this is right on the key zone. You started seeing this rejection, right? Let's see what will happen next. You see, then we had this engulfing candle to the downside. So what are you going to do? Just pick your short position to drop it here, your Excel a little above this point, or even a little above this point. Now let's take it a little above this point because this is our previous high here. This has now become our previous high. So let's put our Excel there, then our take profit to this point too. I take profit to the nearest support or resistance. This is just scalping. Now every candle on this time frame was formed in 5 minutes. So every candle here, this one was formed in 5 minutes, this one was formed, every candle you see here was formed in 5 minutes. So if you have a smaller account, this strategy would be very, very good for you to build your account. But the disadvantage of scalping is that you need to get your eyes on the market. You should always pay attention to the market. You need to always sit beside your chart and see what market is doing, because you can just get to your zone you wanted to, let's say, sell, and something will just happen. You start to find out what is happening. Before you come back, price has already moved in your favor and you miss money, right? So you have to always get your eyes on the market if you are scalping. I love seeing it because I don't really have time to sit with the chart and be looking at my I'm looking at my analysis to play out. But it's also good for people who have smaller accounts, right? Therefore, we need to know what the trend is, and as a trader we always say the trend is your friend. This is AED card 5 minutes. Remember, we are still scalping. We are looking for means and ways to scalp. So this is our this is us on the 5 minutes, and this is our trend. By now we should have known what the trend is. Then we had price consolidating around this point. All right, so price has been rejecting this point for some time now. If I were to be trading on the higher time frame and I needed a confirmation on the 5 minutes time frame, I would have considered this, because this is a multiple rejection on a resistance zone. I taught in one of my videos how to enter trades with multiple rejections. This is one of the techniques or tricks I use to enter my trade. Now let's look at something here. Let's look at what price did at this point. You can see that we still had price moving towards the downside. Then eventually we had a break to the downside, right? So the trend is already in a downtrend. This has made it very simple. Multiple rejections on the resistance zone, and we had price breaking to the downside. So when you see this, what do you think would happen from here? Unless of course price has broken this point and we are moving upwards, or price has broken this point, then we are moving backwards. But apart from that, that, we also need to look at our left side to see if we can get any zone from there. Now this is our next zone. So in a downtrend, we look for a kiss, which is a pullback, then we can continue selling. So we should be expecting price to come back to this point, then we can continue selling from that area, right? So let's see if we are going to have something like that. You see price is still moving in a downtrend. Let's see if we are going to get price retracing back to this point before the selling continues. You see what is happening here? You see what is happening here? You have to be patient, right? You need to be patient. You need to be patient. You need to be patient. All right, so this is, let's draw it well, correct? So this is it here. This is it here. You can see that price came back to that zone. Price came back to trigger this zone. Then this is now the retest. Now there is one thing you should also learn, okay? You will not always get price pulling back to the exact zone. You see, this is our zone here. We're expecting price to move to that zone before dropping. Sometimes price might not get directly to that zone before the drop will continue, but your entry trigger, your confirmation will have to tell you. When you look at this, it is telling us a lot, right? So once you see this, the next thing is for you to just bring out your position to make sure you have a good risk to reward right there. Then you continue the selling to the downside. Always make sure that your risk to reward is always 1:2. So once you're able to get 1:2 risk to reward, you are good to go. So you see what is happening here. Let's see what's the risk to reward here. We have 1:9.8. So let's make sure we have risk to reward of 1:2. So that is our risk to reward. Let's see if we are going to have a sell to the downside. Basically, we are scalping, right? Like I said, this is for accounts with small equity. So you see, this is basically what has happened, and our take profit has been triggered. This is one of the strategies you can use if you want to build your account. If you have a smaller account and you want to build your account, basically this is the strategy you have to use. And you should also know one thing: you need to be consistent. You need to always be with the chart, because this is 5 minutes time frame. If you are not with the chart, it means you are going to lose, or you are going to miss a lot of opportunity. So far so good. I hope you've learned something new. If you learned something new from this video, then leave a comment in the comment section. Also hit on the subscribe button, hit on that like button as well. I'll see you in the next video, and peace out.